I just want people to understand that it's a whole lot more than just Trump tariffs or trying to take advantage of arbitrage. We are at a place right now where desperate times call for desperate measures. We have $28 trillion in U.S. treasuries that are due in 3 years, Dunnigan. Where's gold fit into all of this? Don't know, man, but don't be surprised when you're surprised as to what shows its head in the coming days.
You're watching Silver News Daily. Subscribe for more.
Silver is standing at the edge of a financial explosion, and almost no one sees it coming. The warning signs are everywhere. Global debt at record highs, central banks scrambling to contain the chaos, and inflation eating away at savings like an unstoppable wildfire. But here's what the mainstream media won't tell you. Silver isn't just another commodity. It's the one asset that has historically surged when the system starts to break. And right now, every indicator is flashing red. In 1980, silver skyrocketed from under $6 to nearly $50 in a matter of months. In 2011, history repeated itself. Silver surged from $9 to almost $50 again. But this time, the setup is even bigger. Experts are warning that we're heading into an economic crisis unlike anything we've seen before, and silver is positioned for a breakout that could leave past bull runs in the dust. The banks know it, the insiders know it, the billionaires are quietly moving their money. Yet the average investor is still asleep. By the time the headlines finally catch up, it will be too late. So what's really happening behind the scenes? And why are financial elites hoarding silver while telling the public to stay in stocks? Stay with me, because once you see the full picture, you'll understand why silver's next move could be the most explosive in history.
Dunnigan, I've been doing this for 35 years. And most of my, let's say the first half of my career, with gold under $400, back then an American Eagle gold coin would have cost roughly 6% over the price of gold. So let's just ballpark it at 6%. With $400 gold, that's 4.25 for a gold Eagle. And even if you were paying a 15 or 20% premium for a 63 or 4 grade Liberty, even call it $20 or 20% premium, which is what they were most of my career. On average, a 20% premium on $400 gold is $480 versus $425. So for a $55 premium, you were able to get a coin that was 100 plus years old, that had safety from confiscation, had better upside potential, was a true piece of Americana. Just a cooler thing to own in my mind. And nobody bought gold bullion. Nobody. Until I got to 2008, when it became obvious Obama was going to win. All of a sudden, the premiums went parabolic. And I will tell you that I flew all around the country, as I probably said on your show a week or two ago, for 2 years, buying back numismatics and selling them to the auction galleries like Stax and Spectrum and Heritage. They were paying massive premiums, huge premiums, 60, 70, 80, 90%. And I would call people up and say, look, I sold you 500 of those 63 Liberties, and maybe a 20% premium to spot. I'd like to fly out to your house and bring you 850 gold Eagles. It's never happened before. And what I learned in that trade, which to me, there have been a couple big ones I've done similar to this, in even from Swiss francs into gold and other things, but they all center around one thing, and that is recognizing and exploiting price anomalies. Anomalies, even those that stay in force longer than one would expect. The old market adage, markets can stay irrational longer than you can stay solvent. But exploiting those anomalies really has been, I think, the cornerstone to the success of the largest trades I've ever done. The ones that benefited my clients more than anything. And I think it's the old adage, this time it's different. But, when you talk about historical averages, normally it's not different. We could use silver right now as that example. It's staying way out of whack longer than any of us would have thought possible.
Relative to the global financial system is unraveling before our eyes, and most people are completely unaware. Decades of reckless money printing, artificially low interest rates, and skyrocketing national debts have created a ticking time bomb, one that's now dangerously close to detonation. Central banks are trapped. They can't stop inflation without crashing the markets, and they can't keep the system afloat without devaluing their own currencies. It's a lose-lose scenario, and history tells us exactly how this story ends. Every financial crisis follows a pattern. First, the warning signs appear: rising inflation, failing banks, and governments scrambling to keep confidence intact. Then the cracks widen. Currencies begin losing value, investors panic, and money rushes out of the system. And finally, when the tipping point is reached, the collapse comes suddenly, leaving the unprepared with nothing but worthless paper assets. We saw it in the Great Depression, we saw it in 2008, and we're seeing it again today. But this time, the stakes are even higher. The dollar is losing its grip as the world's reserve currency. Nations are stockpiling gold and silver like never before, and the financial elite are positioning themselves for what comes next. The question is, will you be ready? Because when the system breaks, silver won't just rise, it will surge like never before.
In terms of premium above melt. And I think markets have a way of doing this. They have a way of moving too far to one direction, correcting, and then falling too far to the other direction before they find that perfect symmetry of where they should be. Now, I know most of what we sold. In fact, I just got a message here. Let me see what they say. We have some, but not that much. Probably not enough to continue the discussion on it. But in a couple of weeks, 11,000 ounces have disappeared, and I think it was overly justified. And I'm thrilled that some of your listeners were able to take advantage of it. I will go down on record as saying I haven't seen something that advantageous to the customer in a very long time, if not ever. So exploiting price anomalies it's been the key. And I can think of 5 or 6 things that I have done throughout the years, all of them centered on identification and fast exploitation of those price anomalies. It's like I often mention, I lived in Minnesota for 50 years, and it's funny, I just got an email. One of the golf courses I used to play in Minnesota, it's opening up for walkers only here this weekend, in February in Minnesota. Now, I wouldn't expect, because it's warm enough to walk a golf course in Minnesota this weekend. I haven't looked at what the weather's going to be there, but I did get an email. Pioneer Creek is opening up for walkers. I wouldn't pull out my lawn furniture and start trying to plant, tulip bulbs now, because I know that it's an anomaly. And that's what I mean. So yeah, kudos and congrats to those who took advantage of it. It's as good as anything as I've ever seen.
Silver has always been the financial world's secret weapon during times of crisis. When economies spiral out of control, when currencies collapse, and when faith in the system shatters, silver emerges as the ultimate hedge against chaos. But this isn't just speculation. It's a pattern that has played out repeatedly throughout history. Go back to the 1970s. Inflation was soaring, the dollar was weakening, and trust in fiat money was crumbling. What happened? Silver skyrocketed nearly 800%, hitting an all-time high of 50D per ounce in 1980. Fast forward to 2008, the global financial system collapsed. The Federal Reserve unleashed trillions in stimulus. The silver once again exploded, climbing from $9 to nearly $50 in just 3 years. But here's the key difference this time. The financial instability we're seeing today dwarfs anything from those previous crises. Governments have piled on trillions in debt, central banks have lost control of inflation, and the cracks in the system are wider than ever. Meanwhile, the supply of physical silver is dwindling, creating the perfect storm for an explosive price surge. Every time financial panic sets in, silver lags behind gold at first, but when it catches up, it does so with violent speed, delivering gains that leave investors stunned. The signs are clear. History is setting up to repeat itself, and this time, silver could break through its old highs and enter uncharted territory. The question is, will you be watching from the sidelines, or will you be ahead of the curve before the next surge begins?
Relative to gold, the gold-silver ratio, yeah.
Context. And I think it is the most undervalued asset as a result of it. But in looking at the numismatics, the reason that I did not recommend them for the entire time that you and I have been talking, for over 4 years, other than at one point we did some circulated coins, never went into the uncirculated because they were too expensive. And I have looked at the world as a world that is becoming increasingly more frightening. And I don't say that, I say it in the respect of looking at through my kids' eyes. You have grandkids now. And when you try and, think about what's the world my grandkids are growing up in, we want a world of opportunity and peace and prosperity. And for the last, many years, I think, have questioned what is the reality of that? What are those prospects? And instead of buying coins that were collectible, trading at high premiums, I favored getting as many ounces as possible while at the same time, maintaining your liquidity. Instead of buying a 10-ounce gold bar, buy 10 gold eagles. You're way better off. Anyways, the price anomaly of these premiums coming way back. And look, I bought 11,000 plus ounces of those coins, and you're talking over $30 million worth. And so the price that I was able to offer them to our clients for was ridiculous. I mean, it was much lower than all the competitors, and I could have raised them higher, but I didn't want to do that. I wanted to pass on this opportunity to our clients. And it truly is. I mean, I did it myself. All right. I did it myself with 64 grade $20 Liberties. I traded a bunch of my own stuff for them here recently on this trade. I think it's the best trade I've seen since 2008. I'll stand by that. And there are very few opportunities that I have seen where you are able to buy a 63 or 4 grade Liberty or St. Gaudens for the same price, in essence, as a Gold Eagle, maybe even less as a Gold Eagle. That's never happened in my career. Never happened. And back in '08, with a 64 grade $20 Liberty, which would have been very high back then. I mean, usually I focused on 61, 2, and 3 grade to maximize gold content while still getting the benefits that numismatics provide. I would have brought you 90% more gold. And those auction galleries would have bought as many as I wanted to sell them for almost 2 years. And so just as crazy as that was to the upside, this was equally as crazy to the downside. The word opportunity cost means, what is it going to cost me above buying something like an Eagle to buy something like this? Well, nothing. Well, I've never seen that ever in 35 years, ever. And so that's why I was so enthusiastic about it. I have learned by doing this for almost 5 years that if you go online and start making statements that are not supported with reality, you end up fading into obscurity pretty quick. I would never do that. And I will tell you again, for those people who took advantage of it, your listeners and mine, it's the best value I've seen in gold maybe ever in my career.
The banking system is more fragile than ever, and the cracks are spreading fast. We've already seen major institutions struggle to stay afloat, with bank failures and liquidity crises becoming more frequent. The truth is, modern banking is built on a foundation of trust. But what happens when that trust disappears? The entire system collapses like a house of cards. Look at what happened in 2008. The banking sector was drowning in toxic debt. But most people didn't realize the danger until it was too late. When Lehman Brothers collapsed, panic set in, and within weeks, the global economy was on the brink of total disaster. The government rushed in with massive bailouts, printing trillions to stop the bleeding. But this time, there's a problem. They don't have that option anymore. Banks are sitting on massive amounts of unrealized losses, their balance sheets propped up by artificially low interest rates. But now that rates have risen, their holdings are crumbling, and their ability to withstand another shock is near zero. If another wave of banking failures hits, the government will have to step in again. But the only tool they have left is more money printing, which will destroy the value of cash even faster. Smart money is already moving out of the banking system and into hard assets. Gold is surging, silver is waking up. The elite understand that fiat money can be printed endlessly, but real tangible assets like silver? Those are in limited supply, and when the banks start failing, silver won't just rise. It will become the escape route for those who see what's coming. The question is, will you be ahead of the collapse, or will you be scrambling when the doors slam shut?
Spread innuendo, but if that were true, it would be very interesting. And I asked AI, what would be signs of the LBMA breaking? The first thing it said was widening divergence between paper and physical gold prices in indicating delivery stress. Well, it was at $82 an ounce difference. I don't know what it is now, maybe 30, 35, where, in other words, you can buy a contract in London and sell one in New York and get that arbitrage. Well, that's what a lot of people say that this is about. It's the arbitrage. And I don't believe that. Yeah, it's enticing for a trader to do that, but the cost of shipping it across the globe kind of pulls the incentive away. The second thing it said was reports of delayed deliveries or contract settlements. Well, okay, it's supposed to be T+1. It's now T+8 weeks. And the Bank of England says, well, we don't have enough trucks or manpower. Really? You don't have enough trucks and you're the Bank of England, right? You couldn't just go rent every truck from Ryder and U-Haul and whoever the hell you have to rent it from in London to do this? Don't believe it. They also say, well, some of it is refining backlogs. No, it's not. Because number 4 was major disruptions in supply chains, including mining, refining, or transportation. So check, check, check. And then the other one, number 3, was unusual gold lease rate spikes, reflecting increased borrowing costs for physical gold. They've shot through the roof. They were at 10, 20, 30 basis points. They're north of 6% now. And let's talk about lease rates for just 1 second. I'm a jeweler. And I need this contract, right? I need this gold bar to make my jewelry. And so I buy a contract and I know that I can stand for delivery. It's going to take T+1 in 3 days. I'll have my gold. What do you mean it's 8 weeks? I have orders. What am I going to do? Well, you can lease a bar from an LBMA member. Now the lease rates have gone parabolic from 20 basis points to 6%. Well, that doesn't make it very appealing, but okay, I'll do it. So I lease that bar, give it to the manufacturer to make my jewelry. In 8 weeks, hopefully I get my bar to pay back and I'm made whole. Well, okay, check, check, check. So all of these things have happened. The last one that hasn't happened would be what Tom Luongo is saying, trying to blow up the LBMA and the member banks, and that many are saying that the U.S. banks are kind of flipping the script here and are going long there, which I can't validate. But the last one is banking sector instability affecting LBMA member banks or clearinghouses. So how close are we to a default? Could it really be that is what the idea was to, he says it started with the flipping of LIBOR to SOFR, and that was his signal that this was beginning to happen. And then everything he's done since, draining the gold to silver out of a situation where if we look at give you the number, I often talk about silver, that they have 300 million ounce float trading.
The gold-silver ratio is flashing a massive warning sign, and history tells us exactly what happens next. Right now, gold is sitting near record highs while silver remains deeply undervalued. But if you understand market cycles, you know this setup is incredibly bullish for silver. Let's break it down. The gold-silver ratio simply measures how many ounces of silver it takes to buy 1 ounce of gold. Over the last century, this ratio has typically ranged between 40 and 60 during normal market conditions. But today, it's hovering around 80 to 90, signaling that silver is severely underpriced relative to gold. And here's the key. Every time the gold-silver ratio reaches extreme levels like this, silver doesn't just correct. Thus, it explodes. In the late 1970s, the ratio hit a similar peak, and what followed was one of the biggest silver rallies in history, skyrocketing prices from $6 to nearly $50 in just a few years. The same thing happened in 2011. When silver ran from $9 to nearly $50, the ratio collapsed from over 80 down to 30. So what does this mean today? It means silver is long overdue for a violent catch-up move, and when it happens, the gains could be exponential. Analysts are already calling for a ratio correction back to the mid-50s or lower, which would imply silver doubling or even tripling in price just to return to historical norms. The mainstream media won't talk about this. The financial elite would rather keep it quiet while they accumulate. But the numbers don't lie. Silver is sitting on the launchpad, and when the ratio finally corrects, the surge will be fast, furious, and life-changing for those who saw it coming.
They changed the law recently on reportability, dealer reportability on buyback of junk silver. Dimes, quarters, and half dollars used to be reported my whole career if you sold back 1,000 face or more. Not anymore. It has to be sufficient enough to be able to cover or to satisfy delivery on a COMEX contract, chunk silver does not qualify like a kilo of silver bar would, or a 100-ounce silver bar, or a 1,000-ounce silver bar. And so they pulled it out of reportability in terms of requirements by the dealer. None of this takes away the client's obligation to do the reporting. It just means we won't do it on their behalf. And, you know, that's another example. Not only is silver, you know, historically undervalued, not only is the gold to silver ratio historically out of whack, following the same thing I've just been saying. But these things are happening at a time when the biggest money in the world is rushing and scrambling to acquire physical metal and hold it themselves. I mean, and yet the public is asleep. I've never seen an environment like this ever. The things that are happening on COMEX and the LBMA, it's unbelievable. And it's almost as if this giant Ponzi scheme of rehypothecated gold and silver is coming to an end. And that's what's, you know, interesting. At the same time, you got Warren Buffett, who's sitting on, you know, $334 billion in cash. He has right now $286.5 billion of short-term treasuries. That's 91 billion more than the Federal Reserve has. And this is the greatest value investor of all time, who has no interest in holding securities. I mean, he owns some still, but it shows you his mentality. Everyone is flocking at the Trump trade, and you have the most legendary investor of all time having more cash than, you know, than just about half of in fact, more cash than all but, in terms of market cap, his cash balance is larger than the market cap of all but 30 public companies in the world. What does he see? And why are we seeing such a massive drive to accumulate metal? And it's interesting too, because I asked AI, just for those people who haven't heard this, I asked AI, you know, because everyone's saying, well, you know, there's a whole new thread out there, you know, that we didn't talk about, done again last week, about what I thought this gold coming back was for. And there are people like Tom Luongo who will tell you this is being done to blow up the Bank of England. I'm not saying I believe that or not. It's intriguing that Trump is angry that he found out it was the aristocrats in England that were behind all of these problems with him, with the election, and that he's trying to get back at them by exposing this fractional system in London. And the rumor is that the U.S. banks in London are now long. I can't substantiate any of this, okay? I don't mean...
The insiders know what's coming, and they're quietly making their moves while the public stays distracted. Central banks, billionaires, and institutional investors aren't just watching silver, they're buying it in record amounts. And if history tells us anything, when the people who control the system start accumulating an asset, it means something big is about to happen. Let's talk about the central banks first. Over the past few years, they've been on an unprecedented gold buying spree, stockpiling more gold than at any point in modern history. But here's what they don't want you to know. Silver demand is surging right alongside gold. Some central banks are even hinting at diversifying into silver as part of their monetary reserves. Why? Because when currencies collapse, gold and silver are the ultimate safe havens. And they're preparing for what's coming. But it's not just central banks. Billionaires and hedge funds are also making major moves. Take a look at some of the biggest names in finance, people like Ray Dalio and Stan Druckenmiller, who have been quietly increasing their positions in precious metals while warning about the risks of fiat currency. And even more telling, the silver market is experiencing massive physical withdrawals, with inventory levels dropping sharply from major vaults. And then there's JP Morgan, one of the most powerful financial institutions in the world. They've spent the last decade quietly amassing one of the largest private silver hoards in history, estimated to be over 600 million ounces. If silver was just another commodity, why would one of the world's biggest banks be hoarding it like their lives depend on it? The answer is clear. The big players see what's coming. They know the financial system is heading for a reset, and they're positioning themselves before the rush begins. The question is, will you? Viijua.
I've told you on your show 1,000 times that, my story of the promise I made to my dad, buying something every 2 weeks for now 35 years. Best gift I've ever been given, to learn the power of compounding, of time and of interest and all that kind of stuff. But I've never once looked at gold as an investment. Yeah, I'm very cognizant of its appreciation, which has been, I remember when gold was $250 an ounce in early 2000s. But to me, gold is wealth. Gold is wealth that has continued to appreciate forever. I mean, go back as far as you want. You'll see that it's kept pace with the cost of living and in many cases outperformed it. To me, that's what it is. It's wealth that if you need to use, you're darn glad you have it. And too many people focus on gold as an emergency hedge, as a catastrophe hedge, as the sky is falling hedge. Sure, I mean, I guess you could say it does that too. But to me, it's wealth outside the system that is private, that I can give to my kids if I don't need to use it. And if I do need it, I'm darn glad I have it. And in an environment where not only are we lied to about inflation and money creation, as we're told it's 3 point whatever percent now, but John Williams would say put an 8 in front of that. And so you're at 11 or 12% inflation. So they lie about that. The dollar is continuously being devalued. And in a world of over-leveraged, undercapitalized banks, in a world of inflation and dollar debasement, that's what gold is. It's wealth, and it's there when you need it. It's immediately liquid, and it's universal. So I can't think of a better explanation of why to hold it. The only caveat I would say is that when someone calls me and says, look, I'm buying a house in 8 months, should I do this? I typically say no, because there's too many variables. I would say buy a 6-month treasury right through treasurydirect.gov and remove all of that.
Silver isn't just a monetary metal, it's an industrial powerhouse. And right now, global demand is exploding. While most people focus on gold as a safe haven, they completely overlook silver's critical role in the modern economy. But here's the reality. The world is racing toward a high-tech future, and silver is one of the most indispensable elements fueling that transformation. Let's start with solar energy. The global push toward clean energy has driven solar panel production into overdrive, and silver is a key component in photovoltaic cells. Governments worldwide are pouring billions into renewable energy, and there's no substitute for silver in high-efficiency solar technology. In fact, solar demand alone is projected to consume over 140 million ounces of silver annually, far more than current mining output can sustain. Then there's the electric vehicle revolution. Every EV on the road requires silver for its electrical systems, from battery contacts to charging stations. Major automakers are rolling out aggressive production targets, and with each vehicle requiring up to 50 grams of silver, demand is only going to skyrocket. And it doesn't stop there. Silver is everywhere, in 5G networks, medical devices, semiconductors, and even military technology. Unlike gold, which is mostly stored and hoarded, silver gets consumed, meaning the available supply is shrinking fast. But here's the real problem. Mining output is not keeping up. After years of underinvestment and declining ore grades, silver production is struggling to meet this surging demand. This is a perfect storm: booming industrial use, shrinking supply, and a financial crisis that's driving more investors toward precious metals. The squeeze is already beginning. Silver inventories are being drained from major vaults, and analysts are warning that a supply shock could send prices into uncharted territory. The mainstream media isn't talking about it yet, but when they do, silver could already be on its way to record highs. The time to act is before the shortage becomes a crisis. The window is closing fast.
We don't know a lot about it yet. I hope I'm giving the right credit. I think it was Jan Nieuwenhuis, who's a fantastic writer. And even more than that, he's a investigative journalist. And I think it was him. And if not, I'm so sorry, Jan, but I think it was him who wrote an article about the audits in the past, using the Freedom of Information Act and all sorts of information that basically said, if you trust the auditors, those that have done this, you're making a massive mistake. And I read the article last night, and it's one of these things you got to read 3 or 4 times, basically saying that there's so many things that contradict what Scott Percent just said, that it's been audited every single year, that they're massive red flags that contradict this, that they need to do a real deep dive audit, that the seals that should have never been broken were broken several times, and there was statements that were contradicting and all sorts of stuff going all the way back to the 70s. The audit needs to be a whole lot more than Elon and Trump walking in to see what looks like. I mean, how the hell do you count, that much gold? You don't. It would take, I've done audits for our Brinks facilities in Montreal and other parts of North America, where you have no idea how long this takes and how much time it takes. And even trying to count 1,000-ounce bars on a pallet, it's very hard. I mean, because the way they're stacked, and you don't want to double count it. You got to look at the bar numbers. It's not easy. It's a real process. So that isn't an audit as much as it is maybe publicity. I don't know. But I don't think the gold repatriation has anything to do with that. It's certainly a smokescreen. But it's long overdue. I mean, that should be the first step of a real audit that is done independently, third party, and with great oversight. That's what really needs to be done. But I find it interesting because it's been a hot button topic in this industry for as long as I can remember.
The silver supply crisis is accelerating, and the world is sleepwalking into a catastrophic shortage. Right now, physical silver is disappearing from vaults at an alarming rate, and the numbers don't lie. We are running out of available silver. Look at the London Bullion Market Association, LBMA, and COMEX, 2 of the largest silver storage hubs in the world. Over the past few years, their inventories have been drained, with physical silver withdrawals reaching levels we haven't seen in decades. Just recently, registered silver inventories on COMEX fell to their lowest levels since 2017, and the pace of outflows is only increasing. And it's not just institutional storage. The retail market is also feeling the pressure. Dealers are struggling to keep up with demand, premiums on physical silver are soaring, and delays for delivery are becoming the norm. If you've tried to buy silver bullion recently, you've probably noticed it's not as easy as it used to be. Here's the real issue. Silver mining is not ramping up to meet demand. Unlike gold, where production has remained relatively stable, silver output is declining. Major silver-producing countries like Mexico and Peru are facing dwindling reserves, or degrades, and to tougher regulations. Meanwhile, industrial consumption is at record highs, and investment demand is surging. This is a setup we've seen before. The last time silver shortages hit in the 1970s and 2011, the price exploded, with silver spiking nearly tenfold in just a few years. But this time, the situation is even more extreme. Global debt is higher, inflation is worse, and silver inventories are being drained at a pace we've never seen before. Once the public wakes up to this crisis, it won't be a question of how high silver will go, it will be a question of how fast. By the time the shortages make headlines, the opportunity to buy at today's prices will be long gone.
As much as they say 290 million, but they say it's 10 times understated. So 2.9 billion ounces of silver off of 300 million ounce float. I couldn't find gold, but I did now. And for gold, they have total of about 279 million ounces on paper stored at the Bank of England on behalf of the LBMA, of which only 36 million ounces are available, right? The float is 36 million ounces against 380 million ounces in outstanding contracts. They're about 90% short on their ability to deliver, but it's just trucks and men, right? So could it be? I don't know. It seems a little bit out there, but Tom, who is a brilliant guy, is basically saying this is his way of, in essence, blowing up this paper scheme. And if we reshore all of the gold here, I don't know. I just want people to understand that it's a whole lot more than just Trump tariffs or trying to take advantage of arbitrage. And the possibilities, whether it be gold revaluation, whether it be blowing up the banks in London who Gordon Brown sold almost all of their gold, so you revalue the price of gold, well, it ain't going to benefit London, the UK. I know it seems a little bit out there, but I'm just passing on information that I've heard because it's interesting to let your mind expand a little bit and think, because look, we're at a place right now where desperate times call for desperate measures. We have $28 trillion in U.S. treasuries that are due in 3 years, Dunnigan. In 3 years, it's $28 trillion to get the tax revenue will be under $15 trillion. And so you take all that tax revenue over the next 3 years, even call it $5 trillion a year, which is under that now, and he wants to lower taxes, but give him the benefit of the doubt. $15 trillion, even cut some spending and all that stuff. We owe $28 trillion. So we're halfway there, and that doesn't account of all the debt we accumulate over the next 3 years. We're already at over $800 billion in debt for this year, and it's only February. So the moral of the story is, how do we address this problem? And so, look, desperate times call for desperate measures. Where does gold fit into all of this? Don't know, man, but I think people should don't be surprised when you're surprised as to what shows its head in the coming days and weeks ahead. I think it will be something a little bit more grandiose than what the media is leading us to believe.
A historic short squeeze is brewing in the silver market, and when it detonates, prices could skyrocket overnight. For decades, major banks and financial institutions have been manipulating silver prices, artificially suppressing them through an intricate web of paper contracts. But here's the problem. The system is breaking, and when it snaps, silver's price suppression will be obliterated in an instant. Let's talk about how this scam works. Right now, the silver market operates on a highly leveraged paper system, meaning that for every ounce of physical silver in existence, there are dozens, sometimes hundreds of paper claims on that same ounce. This allows banks to flood the market with synthetic silver, keeping prices artificially low by creating the illusion of excess supply. But here's the catch. This only works as long as nobody demands physical delivery. And that's exactly where the system is starting to unravel. Over the past year, massive amounts of silver have been withdrawn from COMEX and LBMA vaults, and more investors are opting for physical silver instead of paper contracts. If this trend continues, and it will, there won't be enough real silver to back the paper claims, triggering an epic short squeeze. We've seen this before. In 1980, the Hunt brothers attempted to corner the silver market by buying up massive physical supplies, forcing a squeeze that sent silver to $50 per ounce, nearly 10 times its starting price in just a few years. More recently, in early 2021, the Reddit silver squeeze movement sent shockwaves through the market, exposing just how fragile the silver manipulation scheme truly is. Now, the cracks are widening again. Banks that have been shorting silver for years are being caught in their own trap. And if physical demand keeps rising, they will have no choice but to cover their positions, buying silver at any price to avoid total collapse. When that moment arrives, we won't be talking about $30 silver or even $50 silver. We'll be looking at an explosive breakout that shatters every historical price ceiling. The time bomb is ticking. The banks are playing a game they can't win forever, and when the final short squeeze ignites, silver's price suppression will vanish, leaving nothing but pure, unrestrained price discovery.
Then again, when you're in an IRA, I don't know what options you truly have. Anything you do is being reported to the IRS. That's what the custodian's job is to do. The only way to do that would be to start taking distributions of the metal in kind, in my mind, and get it out of the system. When you're dealing with an IRA, you are part of the system. You're in the matrix. And like I told you before, in 2009, after the great financial crisis, there was a bill that was floated all the way down to the House floor. It was rejected, but it talked about taking IRA money, if there ever was another great financial crisis, and converting it into everyone's IRAs into like a guaranteed annuity of sorts backed by treasuries to stabilize the treasury market, to stabilize the dollar. And so you're in the system. And in fact, a custodian is, if I understand this correctly, is the owner of the IRA. You are the beneficiary of all the income. So until you leave the matrix, you're part of the game. So, I think the way to do it, I mean, if I were going to do it, I have found that New Direction, and I don't get paid or have any dog in the fight. I work with all the custodians, and to me, they're the only ones that have earned my respect enough, because quite frankly, most of them suck, and suck worse than others. Some have made me so angry I've lost my mind, but they have proven to me to be the best. And I have faith and confidence in them. And you always want to choose a depository that physically segregates your metal. But remember, you have the ability to stand for delivery in your metal as a distribution or liquidation. And it's a taxable event. But in reality, that is the only way to increase your privacy and to remove counterparty risk. In the meantime, when you're in the IRA, you must choose a depository that physically segregates, not just allocates, right? Allocate is all the metal from this IRA custodian is held in this bucket. No, I want Dunnigan's bucket right here, and Andy's bucket right here, and Jim's bucket right here. It has to be your own name. It has to be physically segregated, not just allocated. And so that is the only way, but truth be told, it is a great way. It is a great way to make a bigger splash in the gold pool, but understand if you ever sense anything's about to get a little bit untoward, shall we say, the ability to stand for delivery and take possession and pay your taxes is never a bad idea in that scenario.
The global financial system is heading toward a monetary reset, and silver is poised to play a critical role. The warning signs are everywhere. Fiat currencies are losing value, debt levels are unsustainable, and central banks are quietly positioning themselves for what comes next. The current system simply cannot survive, and when it collapses, the world will be forced to return to real, tangible assets, and silver will be at the center of it all. Look at what's happening right now. Nations like China and Russia are actively reducing their reliance on the US dollar, moving toward a new monetary system backed by hard assets. At the same time, central banks are hoarding gold at record levels. A move that signals a potential return to a gold and silver-backed financial order. Throughout history, every major currency crisis has ended the same way, with a reset that reintroduces precious metals as the foundation of value. But silver's role in this reset goes beyond just being a hedge against inflation. Unlike gold, which is primarily stored and hoarded, silver is also a critical industrial metal, which means supply shortages could make it even more valuable in a new economic system. If central banks move to incorporate silver into a new standard, demand could overwhelm the already shrinking supply, sending prices into uncharted territory. This isn't just speculation, it's a pattern that has played out time and time again. When fiat currencies fail, when trust in paper money evaporates, the world returns to real money, and that means gold and silver. The shift is already happening, but most people won't see it until it's too late. When the financial system resets, will you be holding real wealth, or will you be left clinging to paper that no longer holds any value? The time to prepare is now.
Risk. But if someone says, look, I have a lot extra money, I don't know what to do with it, I want to put it somewhere safe for the future, yeah, there is no better place to put it, in my mind, than an asset that is continuously, since 2000, it's averaged 9.9% per year. Compounding was up almost 30% last year. And so far this year, it's up 8 straight weeks in a row. There hasn't been a down week yet. Doesn't mean it will always do that. It just means that what gold is a vehicle to maintain your standard of living. And we can go back to, 30s with Roosevelt, go back to Roman times, and there's always those analogies, and they are true. You go back to the 70s, in 1971 with $35 gold, right when he closed the gold window, a 100-ounce, COMEX gold. Look at a 400-ounce gold bar from London in 1971 would have been $14,000, and today, with gold at $29.51, that bar is $1,180,400. Did gold go up, or did the dollar lose all of its value? And I say, in 1963, when my dad graduated college, he was making under $6,000 a year. And he said, your mother and I could live comfortably on that. Just the two of us. We were married then, he said. Well, how the hell does anyone live on $6,000 a year? Well, back then you could. Did the dollar or did the cost of living go up or did the dollar go down? I mean, so in essence, what this is insidious continual inflation eroding the value of the dollar, and gold finds a way somehow to maintain your standard of living, in some cases accentuate it. So you don't buy gold to become wealthy, you buy it because it is wealth. Better than holding it in a bank these days, that's for darn sure.
Silver's historic price ceilings are about to be shattered, and the numbers don't lie. For years, analysts have pointed to 50 as silver's ultimate resistance level, but this time, the setup is different. This time, the forces driving silver are far stronger than anything we've seen before. Let's put this in perspective. The last two major silver bull runs, 1980 and 2011, both ended around $50 per ounce. But those rallies were driven by speculation and inflation concerns. Today, we're dealing with a global debt crisis, a collapsing banking system, industrial demand surging beyond supply, and the very real possibility of a monetary reset. This isn't just another cycle. This is a paradigm shift. Analysts from major investment firms are already raising their silver price targets. Some predict $75 silver by the end of this decade. Others, like Saxo Bank and TD Securities, believe $100 silver is not only possible, it's likely. And if we apply inflation-adjusted pricing to silver's 1980 peak, we're looking at a target closer to $150 per ounce. But here's what most people don't understand. Silver doesn't move slowly. When it breaks out, it moves with violent speed. We saw it in 1979 when silver quadrupled in under a year. We saw it again in 2010 when silver ran from 18 to 50 in just 8 months. Once silver clears 50 resistance, it could launch into price discovery mode, meaning there's no telling how high it could go. This isn't about hype. It's about history, data, and market mechanics. Silver is still one of the most undervalued assets on the planet, but that won't last forever. The smart money is already preparing. The question is, will you be ready when silver breaks free from its chains?
That means. But in terms of liquidity, if you have the ability to keep, let's say, a certain percentage, whatever that amount means to you, in a depository where you have immediate liquidity physically segregated, like in one of our Brinks depositories, yeah, you would then have instant liquidity within just a couple of days at worst, where we can wire you your funds once Brinks moves the metal, rather than leaving it inside of a under capitalized, over leveraged banking system where, you know, the fractional reserve system is that if everyone runs to that bank to get their money, just a couple will get it. That's just like we're seeing on the LBMA right now. That's just like Bernie Madoff. It's a scam. And it is. And yet no one's ever done that because usually you don't see a run on the banks. But are we watching a run on the LBMA in real time? Does that maybe open people's eyes? Maybe we're not. Maybe we are. Only time will tell. But it's this type of what we're seeing certainly could be, looks like it could be, and we'll see how it all plays out. But I don't find those kind of decisions crazy. What I will tell you is that if you are one of the people who wants to do that, don't go to anyone mainstream and tell them what you're doing. They're going to lock you up. I mean, again, people would think I'm crazy for doing what I've done, and I've done it for over 20 years. And I've never missed a minute of sleep, and I've turned out just fine. Trust your gut, and in the end, you only have yourself to blame. So I think these kinds of decisions that are unconventional, even though it makes sense to you all, and the guy who said that probably is fairly well read in this type of information, instead of the people like an advisor who's well read but reading the wrong stuff, reading stuff that would tell you it's all about the Keynesian experiment, which many of us believe are coming to an end. So it's one of these deals where you're going to have to go it alone and trust your gut. Everything I've done since I was a young man, I've done alone, because the advisor would say, A, you're nuts, and B, I don't want to work with you because you're a risk to me, or, you know, I don't like that kind of deviation from protocol or from what's normal. But in my mind, it is normal, and it is normal to be your own bank and to be your own retirement account and to rely on no one but yourself. I think it's always seemed normal to me. So I would tell that guy to go ahead and do it and trust his gut. And certainly, you know, Dunnigan and I are here to help help foster you to get through that. It's not as crazy as it sounds. Even thinking it sounds kind of crazy, but when I think about it, that's me. That's what I've done for a long time, and that's you. So not so crazy after all.
What happens when the dollar collapses? Most people don't even want to consider the possibility, but history tells us that no fiat currency lasts forever, and the warning signs are flashing brighter than ever. If the dollar loses its status as the world's reserve currency, or inflation spirals out of control, the financial system as we know it will never be the same again. And when that moment arrives, silver won't just rise, it will become one of the last remaining stores of real wealth. Look at what's happening globally. Nations are moving away from the US dollar. China and Russia are conducting trade in gold and other currencies. Central banks are dumping US debt, and alternative financial systems are being built to bypass dollar dependency. If trust in the dollar erodes further, it could trigger a rapid devaluation, destroying the savings of anyone still holding cash or paper assets. This is why the elite are hoarding hard assets. They know that during a currency crisis, wealth doesn't disappear. It simply transfers to those who prepared. In the past, we've seen how precious metals have acted as a lifeline during hyperinflation and economic collapse. In Weimar Germany, Zimbabwe, and Venezuela, people who held silver and gold were able to preserve their wealth while their national currencies became worthless. But this time, the situation is even bigger. The entire global financial system is built on unsustainable debt, reckless money printing, and artificially low interest rates. Governments can keep up the illusion for a while longer, but at some point, reality will take over. And when it does, silver's value won't be measured in dollars. It will be measured in purchasing power, and those who own it will be in a position of strength. So when the dollar collapses, will you be holding real money or worthless paper? The time to act is before the crisis begins, not after. Because once the panic sets in, silver won't just be an asset, it will be a lifeline.
God bless you. And you keep enough money in the bank to pay your monthly bills. And if you need to sell gold and silver to add to your cash stash, you can do that. A glint I talked with Jason about that today, the CEO of Glint and the founder. To me, the real utility in Glint is just what you said. I got extra money and I use it for certain things, but I don't want it in the banks that are wickedly over leveraged and undercapitalized. And I think too many people have let that problem go by the wayside, and it's not resolved yet. I think there'll be more bank failures. So keeping it in an account in Zurich rather than in a bank account here in the States is not a bad idea. But look, how do you become your own annuity? How do you become your own bank? How do you do all of that? You do it by accumulating assets and like gold and silver, which then can be monetized if you need to. It's keeping it out of the system. It's not an easy thing to do, and it's rather unconventional. I am not the poster child for Finance 101, and quite frankly, neither are you. But yet, I would argue we probably both sleep well at night, and our portfolios have probably done better than most of the index funds. Certainly better than the S&P. Much better, and without the counterparty risk. So, you're your own bank. I'm my own bank. If you are doing that, it's important, I think, to have a good portion held in a depository to give you immediate liquidity. And you don't want to have, your house filled with gold and silver, security risk, and those kinds of things. I mean, you can have some, certainly, to whatever degree that makes you feel comfortable, but our Brinks programs are a perfect vehicle for that, where, I have a lot of people who have a lot of metal in Brinks, and they'll say, I need $100,000 this week. Please sell, 40 ounces of gold for me. Done. Bang. And we wire them their money. So in essence, they are their own bank. But in a world that is becoming far more complex, far more interconnected, the term you use is systemic, it becomes a challenge. But it's not a bad idea. I think that breaking free from the traditional norms of what is normal, what is conventional, is something I've never had a problem doing, and it's typically worked out well. I think it means trust your gut. And if your gut tells you get the hell out of the system, then do it. And to whatever degree.
Silver's explosive breakout isn't a matter of if, it's a matter of when. The financial system is cracking under the weight of its own debt. Inflation is eroding the value of paper money, and industrial demand is outstripping supply at a pace never seen before. The warning signs are everywhere, but only those paying attention will be ready when the storm hits. We've seen this play out before. Every major economic crisis has led to a surge in precious metals, and silver, with its unique combination of monetary and industrial value, stands to be the biggest winner of them all. The gold-silver ratio is screaming that silver is historically undervalued. The banks are running out of physical silver to deliver, and central banks, billionaires, and institutions are quietly preparing for what's coming. The window to act is closing fast. Once silver breaks past its old highs, it could enter a parabolic rally, leaving behind those who hesitated. The moves we've seen in the past, 400%, 800%, even 1,000% gains, could look small compared to what's coming. The signs are clear, the pieces are in place, and the next phase of silver's historic rise is about to begin. So the question is, will you be prepared, or will you be left chasing silver when it's too late? The time to position yourself is now, before the masses wake up to what's happening. Because once they do, the opportunity will be gone. And remember, this is not financial advice. Always do your own research and consult with a professional before making any investment decisions.